GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's more exciting than finding your matching sock on laundry day. I'm your host, Jay Hamilton, and today we are joined by Kyle Samani, managing partner at MultiCoin Capital. In today's episode, we're going to break down Kyle's thesis for why Solana will flip Ethereum. Now, although today's guest is a managing partner of a registered investment advisor, nothing in today's show should be considered an offer of MultiCoin's investment advisory services or should otherwise be confused for investment, tax, legal, or other financial advice. Before we jump in, are you subscribed to our YouTube? If you're not, you got to subscribe today because if you subscribe before we hit 10,000 subs, and we are oh so close, you could win our crypto investing masterclass. You could win a year subscription to Milk Road Pro, and a bunch of other prizes are available. So smash that subscribe button right now. Also, make sure you check out our friends over at Gemini. Discover Gemini, the US-based exchange built for new and advanced traders. As a special welcome gift, they are offering new customers $15 in Bitcoin just for trading. At Gemini, security is the top priority. As a licensed full reserve exchange and custodian, your assets are well protected. Plus, they offer cutting-edge security features like passkeys to keep your accounts safe. This exchange is setting the standard for compliance and innovation so you can trade with confidence. Head over to gemini.com/milkroad and start trading today to earn your $15 in Bitcoin. Sign up now and get ready to join the trading fun. Kyle, welcome to the Milk Road Show.
Jay, pleasure to be on the show. Long-time listener, first-time caller.
You're the first person that has ever pulled that line on the show, and I am so happy you just said that. It's one of my favorite
It's
lines.
corny. It's cute.
It's great.
I'm glad to be on the show. I've listened to a bunch of episodes, so figured I'd get to drop it. It's a little cutesy thing.
Well done. Well done. Okay, let's start with last week or the week before you spoke at Token 2049 and gave a very well thought out and well-rounded viewpoint on why Solana flipping Ethereum is inevitable in your mind. And that's what I want to dive into today. Before we do get into a lot of the key points of your thesis here, just take us back for a second. What made you want to do this presentation? Why are you so confident in this view?
Yeah, I mean, look, anyone who's been following crypto for a while knows who we are, knows that we've been Solana bulls since literally the beginning of Solana. We were the first investors back in 2018 and have been closely associated with Solana forever. I think what's changed more recently is we've generally believed that ETH is broken and we've generally believed that Solana is correct. Those were statements that I said those were beliefs that we understood years ago to be somewhat speculative in nature and also just required a pretty aggressive amount of projection into the future. And we understood that most people would be unwilling to make those projections. In the last 12 months, I think the facts have shifted more strongly such that we now feel pretty confident saying in a very public and aggressive stance that Sol is going to flip ETH. So our views really haven't changed. What has changed is the rest of the facts in the world and then our willingness to engage accordingly. What specifically has changed in the last 12 months has been Solana did not die in the wake of FTX, which a lot of people thought it would die. And today, very definitively, that is not the case. Very definitively, Solana has achieved escape velocity. Again, I don't really think anyone can credibly say Solana has not achieved escape velocity at this point. And the system is working. They had a lot of problems in the first part of this year, and there was a congestion and stuff. Those were very widely documented. But since the 118 upgrade in May, it's been basically smooth sailing. I have yet to find a single normal human who has attempted to use the Solana blockchain in the last 4 or 5 months who has been able to find any complaints. And then lastly is I look at Ethereum and, we've believed for years that the L2 roadmap was going to lead to where it is today, which is very fragmented and not accruing value to the base layer. But it's only been in the last, call it 6-ish months or so, that we have not. There's been a meaningful number of other people, some of whom have traditionally identified as Ethereum people, who have also been all publicly saying basically the same thing, which is, look, liquidity is fragmented, user experience is broken. there is not an apparent solution to that problem that works between ecosystems, such as between Optimism, Arbitrum, ZK Sync, Starkware, etc. I know they're all working on their own internal interoperability things. And then obviously the value accrual stuff around MEV. And again, like that was, if you understood how these systems worked, then 4 years ago you could have held those two beliefs, which we did hold, and we would say anecdotally on Twitter and in various public forums, but people just didn't take those comments seriously. But it's become, I think, very painful. Like as the number of L2s has proliferated this year, the lived experience of users using all of these systems has become such that like those things that were, I would say, obvious, although like required you to understand the systems, now became no longer required any understanding. It was just, I click the buttons and I don't like how it looks and feels when I click the buttons. And that's become very apparent in the last 12 months. And so we have kind of internally over the course of this year started to feel not just, hey, it's our fringe view that we think Sol can flip ETH, but that the rest of the world can look at the facts that are very obvious and clear and can also reasonably come to the same conclusion. And so now we've started to kind of step on the gas on that front and be more aggressive with our language.
Yeah, we certainly took crypto Twitter by storm with your presentation at Token 2049. So respect you and your team for taking the stance that you guys are taking. We need more people challenging the norm in the space in whatever direction it might be. Let me just mention this at the start. We're going to link to your presentation that you gave at Token 2049. We're not going to go into the depth that you were able to go to that presentation today. So if anybody listening to this wants to go and listen to that presentation, you guys can go do that. We're going to the first part of that presentation is a history lesson on Ethereum. I'm going to skip over that part, let people go listen to that if they want. I want to focus today more on Solana side and why you are so bullish on Solana. So let's start with, you talk a lot about the key metrics on Solana really prove this case. And you mentioned it that, Solana is clearly achieves escape velocity. What do you think are the most important metrics? Everybody in the space is constantly debating what metrics we should be looking at on chain, which ones matter, which show which blockchain is the most successful and is going to achieve long-term, be that L1 that has most of the market share. Kyle, in your view, what are the key metrics that suggest that Solana will flip Ethereum?
Yeah, so what we learned with blockchains is there is no one perfect metric to capture these systems. But in my presentation, I highlight a few that I think are the most important. From MultiCoin's perspective, the single most important is total value being paid to validators, because that represents very explicitly the amount of money that people are spending to get their transactions to do stuff on the blockchain. And today, Solana and Ethereum are more or less neck and neck. Some days or weeks Solana's in the lead, some days or weeks Ethereum is in the lead. But I think it's a generally fair statement to say they're more or less neck and neck. And Solana's obviously come from behind over the last 12 months, where Solana was 1 or 2% of Ethereum, and today is effectively 100% of Ethereum over roughly a 12-month span. So call that a 50 to 100x relative gain over that period of time. The second major metric, and this is basically upstream of total value paid to validators, and this is the one that I comment more on Twitter, is DEX volumes. And I think that one's very important because it's very tangible. If you're not someone who follows crypto or blockchains, and look, most people in the outside world, they look at crypto. What do they see? They see a casino, and but it's not a casino with like random numbers and slots spinning in circles or blackjack. It's a casino in that you have a bunch of volatile assets trading against each other. And how is that captured? Like obviously DEX volumes and is like the direct mechanism by which that is expressed. And so blockchains, we have been very clear in a bunch of presentations over the course of the years that we believe blockchains are asset ledgers and that these are financial systems. And if it's a financial system, then obviously DEX volumes would be the key thing you would look at. And so DEX volumes is, we think, important. And DEX volumes has a direct correlation to total value paid to validators in the form of MEV and how that works in DEX trading. And so we highlight DEX volume. And again, the DEX volume chart and the total value paid to validators chart are basically the same chart, meaning 12 months ago, Solana was 1-ish, 2-ish% of Ethereum. Today, it's effectively neck and neck. So again, up 50 to 100x on a relative basis over the course of approximately 12 months. And then the third chart we flagged is stablecoin transfers happening on chain. This chart, it looks a little different than the prior two that I described. On this chart, again, Solana was I think less than 1% of Ethereum 12 months ago. today is roughly half of Ethereum. So again, probably a 50 to 100x gain in relative terms, but is at roughly half of Ethereum. I do want to note that the methodology on counting that is important. And we explicitly in our presentation excluded limit cancels. Because in Solana, a lot of market makers are placing limit orders on the order book. And if you cancel an order, like that shouldn't count as like a stablecoin movement because like you didn't actually do anything. So our methodology does ensure exclusion of stablecoin limit cancels. So those are the three that we flagged in our presentation, all of which obviously generally support the theory that we were presenting. The other one that I'd say there's two other metrics you see commonly thrown around in this type of discussion. One is total active addresses, and the other is TVL. Let me address both here. I'm fairly certain Solana is the number one blockchain today by total active addresses. I think that has been true for quite some time. We chose not to include it because we don't ascribe any value to it. If you are going to try and ascribe value to it, I would only look at it over a very long horizon. Like I'd say a minimum 6-month horizon. I think looking at like any horizon shorter than 6 months is just too obviously gameable. But if you're looking at like a relative market share change and like, let's say you average the data point out, not like each individual day's active addresses, but like a rolling 30-day average or something, and you look at that chart over the course of 12 months, there's probably some signal in that, not as it should pertain to necessarily the value of the chain, but at least as it tells you probably, hey, there are more, the relative number of users using the systems are changing. I think you can probably infer that if you're doing a rolling 30-day with a 12-month view or longer. Again, I'm fairly certain if you were to put that graph out, Solana would be in the leading position by a pretty healthy margin. And then the last one is TVL. And this is the metric that Ethereum dominates today, still far more than Solana, or even for that matter, any of Ethereum's L2s, such as Optimism Base, Arbitrum, etc. This one, we at MultiCoin have always hated TVL as a metric because two reasons, but the primary one is TVL represents supply of capital, not demand for doing things. And so it like fundamentally captures the wrong thing. And actually in certain protocols, TVL actually grows in the wrong direction with demand. Meaning if you are a user of Aave, let's say you post ETH as collateral and you borrow USDC. When you post ETH as collateral, the TVL number goes up, obviously. When you withdraw USDC, the TVL goes down. And like what matters is that you borrow the dollars because now you are a customer of the system. You are now committing to paying interest. Like that represents demands to use the service that Aave provides. And so we've just like structurally found TVL to be very broken for that reason. The other kind of obvious reason we've really hated TVL is, a pretty substantial amount of TVL in the two largest sources of TVL are borrow lend protocols, obviously, and then AMMs. And I just described why we think TVL is like objectively broken for borrow lend because literally demand sends the metric in the wrong direction in a very direct and obvious way. And then as it pertains to AMMs, generally speaking, more TVL is a good thing for a theoretical future trader because that means you'll have less slippage if you do a trade. So TVL is not as broken for AMMs as it is for borrow lend. However, the problem is if you try and compare Ethereum to Solana using AMMs, a pretty large percentage of Solana volumes are based on orders on order books. And the capital efficiency of liquidity on an order book versus liquidity in AMM, I don't know what the empirical data shows, but I'm guessing it's on the order of 20 to 50x difference in capital efficiency. I think AMMs still are the larger source of trading volume on Solana, but a meaningful minority, I think it's like on the order of 20 to 30% of Solana on-chain trading volumes are via order books. And that fraction of the volume I think has like a 20x capital efficiency gain. And so if you're trying to compare Ethereum TVL to Solana TVL, and then you just don't take into consideration like that very, very important element of capital efficiency for trading, which is the most important use case, it's like what are you trying to infer? So we've always disliked TVL for those reasons. We've thought the other metrics provide far more signal.
Mm-hmm, mm-hmm. Just to go back to the active addresses metric,
Is the reason you don't like that because it's difficult to know how many users there are? A lot of people mistake active addresses for active users. We talk about this a
Correct.
ton. We need to make that correction. I don't know how, unfortunately, because it's difficult to know users to addresses. Is that why you don't like that?
Correct. You can't know how many of them are, I mean, and most people on crypto Twitter will tell you they have many addresses, which like I have many addresses
For
and so
sure.
does everyone else. So very obviously does not represent that. And then obviously bots is the other part of it. So
Yeah.
generally not helpful.
Yeah. Okay. The other thing that we've talked a lot about with Solana is their team and the way their team builds and the way their team is building for the future and their focus on becoming the decentralized Nasdaq has been their tagline since Anatoly started it out of Qualcomm. A few of the key things coming up, which I would love to get your perspective on why they matter and why they will take Solana to flip ETH, are token extensions, Firedancer, their AI chip within the ecosystem. Can you just talk to us a little bit about why are token extensions going to give Solana a competitive advantage long term?
Yeah. So token extensions are pretty under discussed and I think extremely important. Obviously not so today, like objectively today, there's not enough tokens implemented using token extensions to matter. I believe that will change substantially in the years to come. And obviously, Ethereum communities and L2s and the L1 could implement a series of things that would be functionally equivalent to token extension. So I don't mean to say that Ethereum cannot technically do so. It can. However, the problem with Ethereum is coordinating an equivalent rollout across the L1 and all of the L2s and all of the bridges is going to be extremely difficult. Not all of the L2s have the same EVM. In fact, very common, like the most egregious thing is, and I'm sure some of your listeners have had this experience, you actually have a different Ethereum address on different L2s, although you have the same private key. And like, that's really, really bad. And so there's a bunch of weird subtle, I don't know the exact engineering mechanics of each one, but there's different engineering differences between these L2s. And so, yeah, the L1 can propose a set of standards here, but then getting all of the L2 teams to agree to the exact same standard is going to be very difficult, especially given the fact that they have already publicly committed to diverging from the standard in very subtle ways. Moreover, making bridging work in this environment is going to be particularly difficult. Just a couple of like fairly trivial examples to figure that out. One is if you have a token that's KYC that only allows you to move that token to other KYC addresses. Implementing that over a bridge like Wormhole or Axelar or Layer Zero is possible, but again, it just like requires a lot of coordination between the asset issuers and the people defining those token standards and the bridge providers. So it's just hard to make all that work right. Another example would be if you wanted to do confidential transfers of any form. Doing confidential transfers inside of an existing blockchain is possible today. We have Tornado Cash. Solana has confidential transfers natively today, although no one really talks about it. I don't believe it's even possible to do confidential transfers across chains because the bridge providers like need to see the state of the chain to like know what to do. So just really, really difficult. And then a third example would be if you're doing any sort of interest-bearing stablecoin. If you want to do the interest calculations correctly between, I moved the token from chain A to chain B. Again, it's possible to do so correctly, but now you're increasing the burden on the asset issuer pretty substantially, and potentially also on the bridges themselves to deal with the correct token movements. So I just look at the social complexity of the fragmented rollup centric roadmap, and then I look at the technical requirements to make some of these token extensions work, and I think it's going to be extremely difficult to get all of the relevant parties to come to agreement to make that happen. I also believe that the number of assets issued by large regulated financial institutions is going to grow tremendously in the years to come. And that I think those teams will basically, although most of them, if not all of them, issued first on Ethereum L1, they're all basically issuing second on Solana. Today, the scale at which any of these things are issued effectively rounds to zero. No, I'm serious.
I
With that.
know. It's a
Yeah.
good point.
But, if we're going to be in a world in which we've got 50, 100, 200 billion, whatever, $1 trillion of
Yeah.
assets issued by these companies, I don't think that's going to seriously happen anywhere outside of Solana. So that's the part on token extensions. I can pause there. We can go to Firedancer in the
Let's
app.
go to Firedancer. We just talked a little bit about Firedancer coming out of Solana Breakpoint, but would love to hear your thoughts on why Firedancer is such a massive upgrade for Solana.
Yeah. So again, like a big part of my presentation was saying Ethereum has never had a North Star. It does not. Even Ethereum bulls, in fact, will tell you we don't have a North Star because Ethereum can do anything. And like Solana's like, no, man, we're here to build decentralized NASDAQ. And through that lens, Firedancer is super important. Firedancer is a new Solana client, is just starting to go live on mainnet as of a week or two ago. Firedancer is built by Jump Trading. It is 100% open source. Jump Trading is very famously one of the largest HFT firms in the world. And among HFT firms, Jump is actually known generally for being the fastest, especially for like complex network operations, especially getting stuff across seas, over oceans, over big lakes, across cornfields in Iowa, whatever. And you don't even need to call Bill DeSama, who's one of the founders of Jump, but it's pretty clear you can just tell based on Jump's actions over the last 3 or 4 years that they are pretty committed to making crypto rival TradFi, if not displace TradFi. And you can see that with Jump built Pith, and they bought the team that was building Wormhole, and have obviously since substantially accelerated and fleshed out Wormhole. They obviously are doing Firedancer, and the common thread here you can see is that these guys want to build. They believe the future financial rails of the world will be crypto rails, and so that is their motivation here, is to displace Nasdaq and NYSE and CME and all of the other shittier long tail TradFi exchanges around the world, in Singapore and Hong Kong and Cairo and wherever else they're trading. They trade Jump trades everywhere, like literally everywhere. And so they're bringing that discipline and engineering rigor that has gone into making the world's fastest HFT firm, and they're embodying that in the Firedancer code base. Jump's chief science officer, his name is Kevin Bowers. He's the primary architect of all of Jump's high performance networking stuff. He is his full-time job for the last 2 years has been Firedancer. So we have the person who's, I think, literally the most responsible for building the world's fastest trading system in the world, building what is now the substrate for the world's fastest permissionless trading system. That's just awesome to see, like, that degree of commitment and focus to a North Star. Like, we're going to make this thing the fastest trading system in the world, and we have literally the best team in the world to go do this, because that's what these guys have been doing for the last 20 years, and they're the best in the business. And so that we're just incredibly excited about what that represents. Ethereum is like, oh, we'll scale, like, sure, via rollups, but like, what's the North Star? And here there's just like a systematic focus on trading systems. And then the third got a bullet in my presentation was about AI systems. And this kind of really ties back to Firedancer, but I wanted to call it out as a distinct thing, which is, from the first time I met Anatoly, he was very adamant. A Solana node should use every core of silicon available to it to process as many transactions as possible in parallel. Parallelism has been, parallel chips, highly parallel chips have been the standard in computers for, call it, 20 years now or so. Every computer chip today has many cores. Graphics cards in particular are extremely parallel. Modern graphics cards have 10,000-ish cores on them, like, meaning an NVIDIA gaming card for $400 or $500 that you can buy is like on the order of 10,000 cores. And then if you look at all these AI chips, A100s, H100s, all these things, those things are I think like hundreds of thousands of cores on a single chip, if not millions. So massively parallel systems. And from inception, Solana was designed to take advantage of parallelism. And what's really amazing to see is that because of this AI renaissance post ChatGPT, the amount of funding from venture capital firms and from corporate tech giants into highly parallel silicon is growing at the fastest rate in the history of the industry, both in percentage terms and also in absolute terms. And so, we're getting an incremental 20, 30, 40, $50 billion of annual R&D going into high performance, highly parallel silicon. And obviously it's not being designed for Solana, but Solana is just a beneficiary of it because it's been designed to take advantage of it from day one. And I just look at this as like the greatest gift that Solana could have ever received. I'm like, what do you mean? The total R&D dollars into the Solana code base from 2018 till now is like on the order of $250 million. If you want to round up, call it $500 million of like just software. which by the way, that's a fraction of the number for Ethereum. The Ethereum number is
Yeah.
at least 10x higher. And like, we're just going to get like 100x that in silicon for
Yeah.
without asking or doing anything. Like, is just spectacular. And a lot of people don't even have to do anything to take advantage of it. We're just going to get it all for free. So I look at that as like a really deep structural bet that Solana made that the Ethereum community is not.
Mhm. Yeah, and Solana said from the beginning that they were going to build in a way that, based upon this belief that the hardware would get better and they would benefit from all the innovation that comes from the hardware over the course of their development. I want to ask, how do you think the L1 landscape will play out? So, will there be one chain, Solana, perhaps, that dominates all blockchain usage? Will one chain focus just on DeFi, TradFi, the whole finance sector? Because one thing that seems to be happening that confuses a lot of people right now is everything else that's happening on chain and where that all fits. And it sort of fits into Ethereum's, oh, we're the world computer, we're the world on chain. Oh, we're going to do NFTs, we're going to do decentralized identity, we're going to do all these other things. But then a Solana has also done incredibly well with all these different apps that have brought on people in outside of finance and in other ways. I'm just curious, how do you think it all plays out?
I'm not a one-chain maximalist. That's a very
Mhm.
stupid thing to believe. And the reason I'm not a one-chain maximalist is not actually as a function of like technology and network effects, as a function of politics. These systems are inherently political, and the world is obviously not politically homogenous. And so many chains will exist for that reason. And that will manifest in terms of different chains have differing degrees of permissionlessness, different consensus mechanisms, different virtual machines, and whatever else. So the world will be multi-chain no matter what. Now, I think there will probably be a power law distribution of chains, and I anticipate Solana will be the largest of the permissionless chains. So that's kind of comment A. Comment B, as it pertains to like specifically regulated TradFi on chain versus not. Putting TradFi on permissioned chains, I mean, that's already what we have. Yeah, like, is JP Morgan's internal system a blockchain? No. If you adjust JP Morgan's internal systems to be a permissioned chain thing, is that providing some new properties to the system? The answer is yes, with a couple of asterisks on it. Can you still move to a world in that configuration in which users have a private key and JP Morgan can't see the private key and users are the only ones who can update their addresses? Yeah. But if it's a permission chain, then obviously they can just fucking override the database and just make arbitrary entries anyways if they want to or not. So I would say, like, yes, you can get some new system properties with a couple of asterisks. Presumably there would be legal controls in place to prevent JP Morgan from arbitrarily overriding your account number with a new number, as those controls already exist today, even without a chain thing there. Is there a world in which you have many of these permission chains and they all magically talk to one another? Again, like, can you technically construct such a system? Yes. It's just not clear to me who's benefiting in this configuration. Administration costs don't decrease. Users don't have a better user experience. So it's just like, we got to go through all of this work, and it's just like, what have you accomplished? And the amount you've accomplished is somewhere between zero and not a lot. And then, obviously the alternative theory is, people use permissionless public chains. And I would say that, and in that world, obviously there's a lot of fairly obvious user benefits in terms of key custody and permissionless access and auditability and all these other things. And I'd say the dominant view has been over the last 8 years, like, call it up until the last 12-ish months or so, that as TradFi engages with crypto, they will engage via permissioned chains. And there's even been some evidence to support that theory. For example, JP Morgan has this Onyx thing. It is an permissioned EVM chain. It does not replace the guts of JPM's banking operations, but there's now some wing of JPM using this Onyx thing. So I'd say that has been the consensus theory as to how Wall Street would engage with crypto. And what we've seen in the last 12 months is a fairly strong push towards engaging on permissionless chains, really led by BlackRock, and then actually to a lesser extent by Franklin Templeton and SocGen and Citi and some others. And I'd say at this point, I feel pretty confident that at least asset managers will not use permissions chains at all unless the government tells them they have to. But otherwise, it's clear in their benefit to use public chains, and they are publicly telling us that they believe that as well. Banks, I'd say we have less clarity from than asset managers, but again, I'm optimistic that things are moving in the right direction there. But I'd say I'm fairly confident today that permissionless chains will end up being the dominant mechanism for regulated financial institutions to come on chain, which ties back to my earlier point from a few minutes ago about the importance of token extensions. They are only going to be able to do so if they are using mechanisms such as token extensions. I don't think
Right.
it's going to be plausible otherwise.
So let's play that out. So permissionless chains become the dominant choice for TradFi. Let's manifest that. Everybody listening in, we want that to happen, and it's the best thing for so many reasons, as you mentioned. Will one L1 control 80%, 70%, 90%? I know you don't know exactly, you don't have a crystal ball, but like a large majority. Do you
Yes.
think Ethereum just dies or becomes irrelevant, or is there room for another L1 to have much share in your mind?
It will be a power law distribution, high confidence statement. I think Solana today is the best position to be that. What happens to Ethereum in that world? I mean, look, things in crypto don't die, but like they just fall into. Look, EOS still trades at like $1 billion market cap.
Crazy.
Polkadot still trades at like 10 billion or something.
Why?
So yeah, I can't explain to you these things, but like they don't die.
Yeah.
So Ethereum doesn't die, but it does become irrelevant.
Final question before we let you go, Kyle. Is there any other L1s that you are interested in?
I mean, we certainly follow the space as a whole. We are investors in Say and Aptos, and we publicly have discussed our investment theses for both. For Aptos, it was we really thought the Move programming language would be a meaningful upgrade for blockchains for security and safety. And I think most people who look at these systems would agree with that assessment. We thought that would naturally allow the Aptos ecosystem to, I think, grow at a faster rate than it otherwise has. And I think most folks would tell you that like the adoption of Move has been slower than they would like. And then with Say, the Say team, their original premise was we're going to break the rules of blockchains. We're going to permission the validator set. We're going to prioritize transactions in certain mechanism orders and consensus that are not credibly neutral. And we're going to do those things because we believe that will produce a differentiated and better user experience that we think, and then we believe Ethereum and Solana will not do for philosophical reasons. And so like both of those bets we thought were interesting. We thought both of those bets could coexist alongside the Solana bet. It's clear that neither of those ecosystems today is comparable to Ethereum or Solana. They're obviously trying to figure their way out. So your question was, do we follow any other ecosystems? The answer is yes. We're obviously following all of these things, but Ethereum and Solana are clearly in a league of their own.
Mm-hmm. Mm-hmm. Kyle, thank you so much for joining us today. I want to remind everybody that none of this was financial advice. You should always do your own research and only invest what you're willing to use. Investing in crypto is risky. Investing in any asset is risky. So please be safe out there. Kyle, thanks again for your time today.
Jay, pleasure. Thank you.
Awesome. Have a wicked awesome day, everybody. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.